A few weeks ago, I made a video for our main channel about Circle, the mega company that's seemingly intent on becoming the dominant entity in the crypto space. Well, those plans recently suffered a setback when the company announced that its plans to go public were being shelved. So, what happened and why, and have Circle's ambitions been well and truly dented beyond repair? Let's take a look. So, first up, for those of you who haven't seen that aforementioned video about Circle, I do recommend giving it a watch. And that's not only because it means enjoying another 27 minutes and 15 seconds in the company of yours truly, but also because Circle is a truly fascinating company and is a much more influential entity in the crypto industry than many may realize. In any case, the TLDR is that Circle is a US-based company that has received a lot of funding from the likes of Goldman Sachs and BlackRock. That's a good start, isn't it? Can't imagine there's anything to worry about there. Now, Circle is well known as the issuer of the usdc stablecoin, the second largest stablecoin by market cap. And the money it earns from interest payments on the assets backing USDC adds up to hundreds of millions of dollars a year. Now, it's more than likely that a lot of that money is going to be used to buy up large amounts of crypto to then stake on proof-of-stake networks like Ethereum. And this is how Circle is set to become one of the most influential entities in crypto, and that is just the beginning of its ambitions. Its ties to Wall Street, the Federal Reserve, and MIT also suggest that it could well become the company behind a future US central bank digital currency. So, Circle is, in short, one to watch very closely. Now, the extent of Circle's ambitions are perhaps most apparent from its plans to go public, plans which have, of course, been put on hold for now. So, in case you didn't know, going public, especially in the US, is a huge deal, as it opens the door to potentially billions of dollars of investment from, well, the public. All but a handful of the world's biggest companies are publicly listed for this reason. And, fun fact, some of the biggest companies that remain in private hands are accounting giant Deloitte, Mars, the maker of Mars bars and M&Ms, IKEA, and Lego. Some of the happiest years of my life were spent playing with Lego. Oh, to be 35 again. Anyway, where was I? Oh yes, the most well-known crypto company to have gone public so far is, of course, Coinbase. And even though its shares haven't proved a great investment since it launched last year, the move has nevertheless catapulted the exchange to a whole new level. Indeed, despite the bear market hammering Coinbase's stock valuation, other crypto companies, including Kraken, Bitfury, and Ripple, are thought to be keen to go down the same route. I don't know, maybe once things have picked up a little bit, eh, chaps? And, spoiler alert, it seems to be the bear market that's largely responsible for Circle's decision to put going public on hold. It had planned to go public via what's known as a Special Purpose Acquisition Company, or SPAC. According to Investopedia, a SPAC is defined as, quote, a shell company formed to raise capital to acquire an existing company. Now, SPACs are sometimes referred to as blank check companies and often won't even state which companies they're looking to acquire. You'll sometimes see SPACs described on stock investing platforms as looking to partner with a company in the X, Y, or Z sector, or something equally vague. Now, the main advantage of going public this way is the fact that it can considerably cheapen and speed up the whole process. The SPAC raises capital from investors, usually at around $10 a share, goes public, then acquires its target company, thereby taking it public too. Now, SPACs themselves are nothing new, but have exploded in popularity over the past couple of years, in part because they can present tempting opportunities for investors to get early exposure to promising companies before they list. Two recent companies to have gone public this way are Virgin Galactic and wannabe electric van maker Arrival. A glance at the share price of either will tell you that SPACs can be pretty high-risk investment vehicles. Well-known exchange eToro was also looking to go public via a SPAC, but that deal fell through. All of which brings us full circle back to Circle. It was due to go public via a SPAC called Concord Acquisition Corp, which is backed by a former CEO of Barclays Bank. That deal is now dead, apparently by mutual agreement between Concord and Circle, despite a potential valuation of up to $9 billion. Jeremy Allaire, Circle's CEO, said, quote, "We are disappointed the proposed transaction timed out. However, becoming a public company remains part of Circle's core strategy." Now, this timing out appears to be in reference to an absence of regulatory approval from none other than our friends at the SEC. Though when pressed on this on CNBC's Tech Check, Jeremy remained tight-lipped as to why exactly the SEC hadn't approved the merger between Concord and Circle. An article in Decrypt, meanwhile, quoted a Circle insider saying, quote, "The merger could not be consummated before the expiration of the transaction agreement, as the SEC has yet to declare the S-4 registration statement effective." So, it's the SEC's fault, right? The cold, dead hand of Gary Gensler strikes again. Well, believe it or not, but that might be a bit unfair on the SEC, not something you'll hear me say very often. The real culprit in all of this is ultimately the current crypto bear market and the recent goings-on at FTX. Yep, it's all SBF's fault. Now, this may sound trite, but it is worth bearing in mind that Solana is the official blockchain of USDC, and Solana's exposure to FTX and Alameda could well have set alarm bells ringing at both Circle and the SEC. Regardless, this just isn't a good time to be trying to take a crypto company public, even if that company is apparently in robust financial health and enjoying plenty of high-profile backing. We're all well aware of how the SEC feels about crypto in general, and a reluctance to sanction a big industry player being unleashed on the public is not exactly surprising. Moreover, 2022 has been a terrible year for SPACs of all types, more generally. Even so, this won't be the end of the story for Circle's bid for crypto domination. As Jeremy said, the dream of going public is still alive, and SPAC or no SPAC, we won't have heard the end of this tale. So, keep your eyes peeled, because if you see news that Circle's going public is back on, chances are the bull market won't be far behind.